Welcome back to Wake Up with Cheddar, everybody. U.S. futures pointing to a modestly higher open this morning as investors await more retail earnings. Futures rising slightly across the board. This comes after the S&P 500 surpassing its all-time record closing high yesterday. The S&P closing at 3,389, breaking the record set on February 19th. Big tech was a driver of those gains for the index. The Nasdaq also rallying to an all-time closing high. Another round of earnings this morning. We'll get another look at the retail landscape with results from Lowe's and Target already out. We're waiting on a report from TJX companies ahead of the opening bell. For more on the markets, I want to bring in Michael Jones, CEO and chairman of Caravel Concepts. Michael, good morning. Thank you so much for waking up with us today. Let's talk about the S&P finally notching a record close yesterday. When you track the S&P's speedy turnaround, what are your takeaways here? What does this mean for investors, Michael?
Well, our theme throughout 2020 has been betting on a bubble. That's what we believed at the beginning of the year when the economy was really strong and the Fed was only printing $1 trillion to finance the deficit. It's what we believe now when the economy is much weaker, but the Fed could print as much as $5 trillion. Having said that, we do think that the failure of the president and Congress to reach an agreement on a new COVID-19 stimulus could cause a short-term pullback in our bubble forecast. And the reason we believe that is, most importantly, the Fed's already financed all the deficit spending thus far. They need another round of spending in order to crank up their money printing machine. By putting a pause button on the money printing machine, the Fed makes it possible that we have a pullback. We've also been going up in a straight line since the lows of March. We're really overdue for a pullback. And last but not least, the political consequences of not reaching a COVID-19 deal, the drop in the unemployment benefits, the potential that people could be evicted from their homes as early as 2 weeks from now, all of that could have people worried about a Biden presidency and the tax increases. Those could be the catalysts we see for a short-term pullback in an overall very powerful up market.
We will be keeping an eye on that. I have to ask, Michael, what does it mean that it only took the stock market 5 months to go from such a low to a brand new high?
It means that liquidity is more important than economic fundamentals. The Federal Reserve has pumped $2.5 trillion on top of the trillion that they'd already pumped into financial markets before COVID-19. All that liquidity rushing into financial markets, it just swamps any fundamental concerns. We do believe that when we get the next COVID-19 stimulus package, and we do believe it's when, not if. When we get that next package, there's going to have to be another $1.5–2 trillion of money printed, and that's going to be the rocket fuel that pushes us higher. Ultimately, investors, all the worry about COVID-19, all the worry about, there's probably going to be some weak economic data in the next few months. None of that matters nearly as much as what is the Fed doing with their magic printing press.
That leads me to my next question, Michael. Is the bear market of 2020 officially over, in your opinion?
I believe it is because while the liquidity, this has been a liquidity-driven rally. It really hasn't had the fundamental underpinnings that you would like to see. I do believe that with all the energy and effort that every free market economy across the world is putting into COVID-19 vaccines, by 2021, we are going to see a vaccine, and that will allow an improvement in the underlying economic fundamentals across the world, and that'll provide the fundamental catalyst to this liquidity-driven rally. I also think that there are some fundamental parts of the economy that really benefit powerfully from what the Fed is doing. Housing is the most obvious beneficiary. We see a potential bubble in the housing markets, but unlike bubbles in the stock markets, housing markets bubbles directly create jobs, directly create a powerful multiple throughout the economy. So that's another really nice fundamental economic underpinning that's going to help create a sustainable higher level for equity prices.
Let's switch over to earnings. We're expecting Lowe's, Target, and TJX companies. Yesterday, retail earnings fared better than expected. So far, Lowe's are topping estimates, Michael. But are expectations just super low right now, or is the retail space actually seeing a turnaround?
I would say that we're seeing a window of excellence in an overall troubling environment for retail. And what I mean by that is if you had a really powerful online presence, the way that the way that Target and Walmart did, if you were an essential retailer and all, the Walmart, Lowe's, Target, all were able to remain open when a lot of their competitors were closed. And then last but not least, consumers received $1,200 in stimulus checks. We had $600 in enhanced unemployment benefits. All of that created a powerful surge in second quarter earnings for these retailers. Now, most of those conditions are falling away. Some of their competitors are reopening. More importantly, though, we have gotten stimulus has been cut in half. The unemployment benefit has gone from $600 to $300. So far, only 7 states have qualified to even distribute that lower $300 benefit. And probably most importantly, FEMA has announced that they may only be able to pay that benefit for 3 more weeks. So all of those things suggest that unless Congress gets together with the president and creates another stimulus package, consumers are going to have less money in their pockets in the third quarter. Walmart has already sent a warning signal that the lack of stimulus checks is impacting their sales already. And so we would expect the third quarter to be less sunny for the retailers than the second.
Before I let you go, I have to ask, with the next stimulus bill still on hold, why are markets rallying, Michael?
I think markets like Caravel believe that it is a matter of when, not if, that we get another stimulus bill. Ultimately, there is a presidential election coming in November, and cutting the unemployment benefit in half, having it potentially expire before the end of September, that is political poison for both parties. Even the Democrats are now starting to say maybe we should extend that unemployment benefit through the election. The other thing that is going to be very difficult for the president to just sit and watch as we move through September and October is his executive orders really didn't accomplish much in terms of preventing foreclosures and evictions. That needs congressional money to back it up. And if you start seeing voters evicted from their homes in September and October, that's, again, incredible pressure on the political process to find a solution to reach a compromise. I think the markets are very confident that we're going to get another stimulus bill, if not before the election, which would be my bet, but certainly afterwards.
Michael Jones, CEO and chairman of Caravel Concepts. Always appreciate your insight, Michael. Thank you so much for your time this morning.